What's going on, everybody, and welcome to the video. In this one, we're going to be talking about a stock that's kind of catching a lot of hype recently. I'm seeing a lot of other people talk about it. They recently are coming up with their ex-dividend date within the next 2-3 weeks. So there is something to watch for, a very high yield stock. So we'll talk about this, give it a little bit of evaluation using my spreadsheets and a few other things. But if you do enjoy this video, I'll ask you to subscribe to the channel and you turn on post notifications so you'd miss out on any of my future content. But let's go ahead and get straight into the video. So first up, as we kind of do at this channel, we're going to just go over my portfolio, how it's doing recently, just looking at my portfolio dashboard. If you do want access to this spreadsheet and a multitude of other spreadsheets, check the link in the description down below to my Patreon, where you can get all this access. You can get it right here. You'll get a ton of different things, such as the portfolio tracker, the spreadsheet, the valuation spreadsheet, DCF models, and all these different things that are very useful. We'll see on stocks, I'm down pretty bad, 6.84% all time. This is, if we go to my M1 Finance, I don't want to just kind of have you come to the video and think I'm a terrible investor. This is just a multitude of things being down over the market, looking at my portfolio and then all these different things. Had some pretty big losses just in the sense of markets are down, things are down over the past few years. It's not like I've been invested in these for the longest amount of time, but continuously adding money and letting patience play its part. So looking at my current holdings, we'll just go ahead and use the spreadsheet to kind of show you everything. My current holdings right now include of these: Microsoft, Apple, SPHD, Starbucks, and the list goes on and on and on. If you want this access, remember, you can just check the link in the description down below. It gives you your annual income, all these different things, how much you're up, down, all this different stuff, which is very important to see. Another thing I like to notice is it tells you just how much estimated dividend income you are, your forward dividend yield on cost. You get a dividend dashboard as well. You get to see your portfolio total yield, how much you've earned in dividends all time, monthly dividend income, how much you make per day, things like that, your yield versus yield on cost. So check this out, the link in the description down below if you are interested. But let's go ahead and talk about the stock that I do want to be kind of evaluating today, and that is going to be ticker BTI, British American Tobacco. There's a lot of talk about this stock. Just looking at its dividend yield, 8.78% is absolutely absurd. Okay, that's a very high dividend yield. If they can continue this consistency, that'll be very interesting to see, especially assuming that they have a payout ratio of just 60.6%. This does seem pretty sustainable and seems like something that's worthwhile looking into. But over the past year, the stock is down 11.69%, trading right now for $37.79. Now, it's down just overall, but it does have a TTM, trailing 12 months, P of 10.87 with some pretty good margins. A profit margin of 24.6% is nothing as a joke. And let's go ahead and look a little bit first at the DCF valuation, which we are going to be using a DCF value, and we're going to be using a dividend discount, Graham's formula, a multiples model, and then we'll get the final overall value estimated for this company. So you just kind of type in their free cash flows, some growth rates, things like that. Gives us an equity value of about $43 billion, okay? Then we do the total outstanding shares. All these numbers are in millions, okay? Highlight this part real quick so that you do know that these numbers are in millions. I'm going to actually go ahead, fill this with yellow. And then what we'll see is the DCF price per share is only $19.39, just based off of all the math and things that go into it using these formulas. Current price is $37.79. So this does give us a downside of about 48.71%. But if we look at the other models, they kind of say the exact opposite. So looking at the dividend discount model, it kind of takes how much this company has paid in dividends over the past year, or over the past 4 years, 5 years, and you kind of just take this number quarterly and it gets you the annual number, the growth rates. Average growth rate for BTI is about 2.84%. I'm giving it a discount rate of about 8.5%. It's kind of what I was finding online, which is a good discount rate for BTI just in general. And then growth rate, I wanted to be a little bit conservative, about 2.84%. If we look at their most recent dividend announcement, what we will see is that it announced to be about 70 cents. Ex-dividend date is going to be March 23rd of 2023. It is currently the 6th, so that's just 2-3 weeks away. And dividend growth is for the past 0 years. So I'm going to be going with that flat rate, assuming that maybe they can get this going, but their dividend discount model price per share is about $53.19, giving about 40% upside on the stock, which is pretty solid. Then we use Benjamin Graham's formula, the kind of intrinsic value formula. Typing in all this information gives you the EPS, everything else. Only thing you have to type in is the growth rate, which is 11.8%, but you have to type in as a whole number. We kind of get this number from FinViz. We'll see right here, EPS over the next 5 years is expected to grow over 11.8% annually. So that's a very good growth rate. And then just kind of go back, the current average yield on AAA corporate bonds is about 4.4%. This gives BTI an intrinsic value of $89.36 based off of this formula alone, which is very solid stuff. And then, remember, it's $37.80 now. That gives us a 136% upside. And I gave it a very strong margin of safety, 25%. If you wanted to, we could even lower this a little bit more. And it's still saying this is a strong buy and any good price at about $71. So this is telling us to buy the stock. Then we go to the multiples modeling, just kind of looking at different competitors and their PE ratio and kind of comparing in that sense. So looking with BTI compared to its competitors such as Altair Group, Philip Morris, and Universal Corporation, we get an average combined valuation of $52 per share, which is very solid, giving us about 37.58% upside on the stock based off of just the multiples modeling price. Now we go to the final intrinsic value. DCF price number was $19.39, which was negative. Dividend discount was $53.19. Grams price was $71.49, and the multiples model price was $52. Now the current price of this stock is $37.80, giving us with this intrinsic stock final value about $49.02, about 29.67% upside. If I want to give it a margin of safety of 15%, we can even increase a little bit more. We can do 20%. Still saying this is a good buy price within the next $1.40 to $39.21 with a 20% margin of safety, giving us some very good upside. So right now, this stock is rated to buy based off of this stock valuation spreadsheet. Remember, if you do want access to this, check out the Patreon in the description down below. It literally takes no more than 5 minutes to get all this information. You can do this with all your stocks, you rebalance your portfolio, things like that. That's what I've been doing recently. So very useful stuff. But currently, what I'm going to be doing with BTI is I think I'm going to be leaving it alone. Just me personally, I don't really plan on adding any new positions in my portfolio as of now. I kind of plan on trimming the portfolio, kind of cutting the fat off the steak and focusing more on good, high quality companies in that sense. So I'm not going to be adding anything new for the time being as of now, but I want to provide this information. Remember, just because I'm not buying a stock doesn't mean that the stock isn't a bad stock or anything like that. It's just not all stocks has ever been in each other's portfolios. I'm not an older investor. I'm very young. And I would prefer high dividend growth rather than a high current dividend yield of 8.78%. That's just the way I'm investing. Maybe you want that income for your portfolio, so keep that in mind. Another thing I wanted to mention about this stock was the target price was $53.57. That's a little bit higher than the intrinsic value, so we are seeing that positive overall consensus on this stock just throughout, just a larger population per se, but that is going to wrap it up for this video. So if you did enjoy it, make sure to subscribe to the channel, turn on those post notifications so you don't miss out on any of my future content. Remember to check out the Patreon in the link in the description down below to get yourself these incredible resources. I'm going to continue to be adding new things, different formulas like Warren Buffett valuation formulas, things like that, and continuing to add and add and add. So if you are interested in that, check it out. Just $5 a month. Also use the link in the description down below to get that M1 Finance free $100 while they do it. And I will see you at the next video.